going, people? Chris here. I'm gonna kind of talk about like how I trade XPX. Um, I do want to mention that XPX is a dangerous game if you don't have a strategy. It's very important that you have some sort of strategy when you're trading zero DTEs, especially SPX because you know typically like if you trade like a zero DTE SPY contract like at the money maybe be like I don't know, $100, $150. That same at the money contract on SPX is probably like $800, $900. So it's like 10 times the amount or whatever. But for me, I like to use three market internals, which is the advanced decline line. I pay attention to VIX, and then I also kind of interpret, what's going on with the tick. And this is something I learned from the uh, John Carter, and I also learned some additional information from S&B Capital, which is a prop firm out of I want to say New York. But I kind of built like my own little technique to it. So like I usually like to follow like what's going on with the advanced decline line, and along with what's going on with VIX. Now I don't like to trade um, SPX a lot when VIX is really low. I really like to catch it when VIX is elevating. Um, I'm still experiencing with like what levels I really like, but below 15, even like below 16, um, I don't really like to trade them because those zero DTs they just don't move the same. And from my experience, and I've been using this strategy for over a year now. From my experience, when the volatility is contracting, when VIX is contracting, um, when you're playing with those $4 money contracts, they're just not going to move. Like even if there is like a move down, those contracts are not going to move fast. So you really want VIX to be really high to play, farther out the money. When I say farther, I mean maybe, 10, 15, 20 points out the money. If not, then it's very important to stay close to the money. Now, being close to the money means you're putting more capital at risk, but that's part of the game. So, no, this morning, I mean, we have the advanced decline line. It's pretty much just selling off right from the beginning, right? We got to sell off on the advanced decline line. We got to pop on it on the VIX, right? VIX is just popping right from the early session. We're breaking this 16 spot, where we kind of see like we get a little spiky above 16, um, right? You see kind of see here when we're above 16, we kind of retested 16, but at the same time, while we're spiking, we're kind of cracking on, the SPX. So for XPX, and I think this in general when you're trading, the indice, it's important to kind of identify, key levels. Whether those levels are intraday, daily levels, whatever. Just find the levels on the chart that you believe are important because if you see it, other people see it as well, and it can be really important. So for me, I think like this 6108 level was pretty important, and you can kind of see us here dabbling around since looks like was that last Friday? Yeah, around like last Friday, right? We kind of tapping, right? And then we broke it, right? You kind of see us flush down to where it's a 6100, which lines right back up to this previous peak back here from the previous Friday, right? So 6100 is a big spot. I mean, I still got some stuff left on my chart, but you can kind of see, this 6100 where, it kind of there's some reactions there, right? 6100 reaction here, 6100 reaction here, 6100 or slightly reaction here. Then we pull back about 10 points. So I mean, it's important to kind of have levels identified, and if we go back over and we're looking here, you can kind of see, well, okay, now we're above these levels, and then what happens today, right? We kind of break that level, flush that level, come down to a new level, which I probably need to figure out. Does this line up with anything? Um, maybe not, but I'll just mark it. And for me, I wouldn't kind of like. I think it's an important level because it's today's low, so I think it's good to mark, but just kind of keep track of it. But you can also see here, well, what we did was we pulled back and we pressed right back into where We pressed right back into 61. It's the 6108, and then we kind of faded back down and pretty much, tapped right back into today's lows. Um, Now the thing is, like when you see this, I'm looking here on the tick. I mean, I'm looking here on the advanced decline line. Advanced decline line is continuously selling off, and then we kind of break structure on the advanced decline line, and we start to go higher. Same time, we're gonna look here at the VIX. Um, no VIX. What is VIX doing? I don't know why it's not lining up. Oh, it's already over here. Right. We see VIX. Not really making new highs. Even though price right here almost made a new low, VIX didn't make a new high, so right, that's some divergence right there. But the thing you really want to look at now, and this to kind of help you like not being stuck in a bias, is that from 1 o'clock, VIX is just trending downward, right? VIX is just trending down for the entire time. But at the same time, we look at the advanced decline line. The advanced decline line, pretty much since 1 o'clock or so, well, not 1 o'clock exactly, but this bottom here pretty much lines up with this bottom or this higher low on the on SPX, right? And we're just trending upward. So now that we're trending upward, you probably shouldn't be looking to take any shorts because the advanced decline line is showing you its strength to the upside, and the VIX is curling down. Now, the thing with the tick, I really like to play the tick action here when it really gets extreme. Like you can see, we got extreme here at the end of the day, and I pretty much ignore end of the day tick alerts. I don't think it's really good to play because a lot of action happens at the end of the day. A lot of passive money comes into the market, so you just never know. But I guess the question you have to ask yourself is, was there a change on the tick? So I'm just going to turn on this line chart. We're going to look at the tick from the early morning session, right, which is starting right here. This early morning session, tick pretty much maintained below the zero line this entire time, right? Then we get a change in structure here, where now tick is starting to be above the zero line. And as you can see here, price starts to push. Now we do pull back, tick gets a little bit lower. But now, as we are holding this trend, VIX is trending down. The advanced decline line is trending up. Well, look at the tick. The tick is holding above the zero line this entire time. All right. Yeah, undercuts it a little bit, but you're just giving yourself a direction in terms of what's going on with the internals. Right. So for the majority of this portion of this entire move, we're trending above the zero line, and I think that's important to pay attention to if you want to have a idea of like, okay, should I get short or should I get long? So that's one way I use tick. There's a couple other ways I use it, but I really find it helpful that if you want to trade zero DTEs, and me honestly, I probably should be looking to use this strategy more for futures. Because now I don't have to worry about any data decay. I can just literally just play the price action. That's the thing with like playing zero DTEs. You can get chopped up, and that's why I'm not in these pretty long. Like if they're not working when I want them to work, I just get out. I take my $50 loss, I take my $100 loss, I take my $200 loss. I just move on, and then I just wait for another setup. Because when these like a move like this move right here. For example, this move right here, these contracts, I want to say it was the 605s, the 6105s, these went from like $4 to like $8 this fast. So yeah, they move fast, and yeah, they can move fast down, but you shouldn't be staying in those when they're moving down. You should be exiting and managing your risk, and that's really, really important when you're trading zero DTs, is not to kind of get stuck in it to say, oh, I'm just going to hold it until it comes back to break even, because the way they work, they're not designed to go back to break even because of that data decay will eat at your contract, and you sit and you bought this contract right here thinking it's going to break out, and then it pulls back, and I promise you, once it gets back up here, you're probably not even at break even, and then this move happened. right? And then it goes all the way up here. You're still not at break even, although you got in right here at 609, and now those contracts are trading at, you know, 61.14. You just gotta be very, very diligent in terms of what you're seeing on the charts, and being mindful of what the internals are showing you. Once I see this, I don't think there's a need for you to really get short. I mean, you might want to take a stab and maybe a scalp on something, but for the most part, I think if you kind of align your strategy with what you're seeing with the internals, you'll have much better success. But this is Chris here. Peace. God bless.